35 of the New Barbarians podcast. Today is Monday, September 15th, 2025. We are recording in the evening, so hopefully this will be out before the Tuesday morning commute. Today we are joined by Ehsani. He's the executive director at Crescendo Partners, as well as an adjunct professor at Columbia Business School. He is the author of the Value Hedgehog newsletter on LinkedIn and soon to be published author of the upcoming book, Finding Value in Numbers. He's also the organizer of the Generative AI and Investment Management Conference at Columbia this September 30th. And I'm proud to say that Harmonic Insights will actually be a sponsor. And Debbie Guan and I will both be leading some fireside chats there with a few of the speakers. Welcome, Ehsan.
Well, thank you for having me. It's an honor for me to be on with you and Mark.
Our pleasure, Ehsan.
So as usual, I will just briefly talk about returns and a few comments about quantitative finance, and then I'll hand it over to Mark, who will give us a macro update, and then we'll dive in with Ehsan. So futures markets are currently forecasting a 25 basis point cut on Wednesday, with 2 further cuts this year and probably another 3 in 2026. And as we've spoken about recently, jobs were weaker than originally forecast, which is unfortunately a common thing with macro forecasting. Revisions can be pretty materially different when they when we find out what the truth is. Last week, volatility rallied. It was up, depending on where I'm, like which screen I'm looking at, let's call it around 3%, which wasn't quite a 2 sigma move. So, volatility is obviously volatile. So, it takes a pretty big move to be statistically significant. And it rallied again today. So it looks like the macro continues to drive factor returns.
Easy money, Bill. Easy money. That's what drives it.
And it is, in fact, easy money, as forecast by rate cuts and, more of a dovish outlook for the Fed just means more money, which more money means more price increases for risk assets. It's a pretty straightforward analysis. Crude oil ended the week up nearly 2.5% as ceasefire and geopolitical tensions increased. So, in EMEA, there were some defensive moves last week. Dividend yield was actually up almost 3 sigma in the EMEA region, and earnings yield also saw a 2 sigma return to the upside. And then, momentum, volatility, risk. And on the other side, defensive factors did poorly last week, and that's all, I think, as expected. So as I've said in the past, it's kind of business as usual in quant land, which doesn't mean the world is normal. It just means that quants can typically sit back and watch the world behave somewhat crazily and not worry too much about their models because these aren't statistically significant moves across assets and global markets. So you can take it away, Mark.
Bill, does that mean that I wasn't in the quant world like you were. I was more fun on the fundamental side, and I worked with some of the quants, giving them sharing data and sentiment data, and they'd always talk about the lag 1 month. They're the antique-arch model people. They don't wait that first initial data. They look for the longer trends, say on balance across medium length models. So are you saying that they didn't do anything because if it was a 5 standard deviation move, would they consider near-term data, or is it still not hitting their models?
So it depends on your strategy, but for the most part, we're talking about pure systematic investors. So they never actively tilt their portfolios or change things. I think one cool concept that I like with kind of a macro to micro approach to equity investing is you can have macro tilts that are expressed through factors if you have statistically significant moves. So in your example, I could theoretically have a model that says if there's a 5 standard deviation event, which is extremely abnormal, then you could end up in a different regime, and certain models could kick in. You could tilt things to or away from certain factors, and I would think anyone that's doing factor rotation or factor timing would be applying something along those lines. It might be machine learning and AI and some extremely like complicated statistical way to get there, but effectively what they would be doing is saying, like, when there's a statistically significant change in prices or factor returns, you may automatically pivot your portfolio again in a purely systematic way.
And so how much of the not just AUM, but you think of the employment out there, how many people as a percentage in the quant world are focused on what you said, which is macro and fast moving? Is that 5% or 10% of the systematic money? If you had to ballpark it.
Yeah, and I think we'd have to ignore like CTAs, so futures, trend following a momentum, like those are just going to be following price action. And of course, like risk management does kick in with any, like you said, 5 standard deviation event. But yeah, there are purely systematic macro strategies that are often combined in terms of products, and a hedge fund product might combine both, but it's typically a smaller piece. And then of the entire quant complex, like guessing 10 or 15% sounds about right. But even then, quants aren't typically, staring at the Bloomberg and watching the news. They'll talk about things on like T+1, like if there's a big thing that happens today, you'll see what the impact is tomorrow. And then going back to my risk manager days, like someone like me may show up at your desk and say, like, what's going on with your portfolio? What's this strategy doing? You had what was a 5 standard deviation event. And a lot of times the answer would be like, oh, I don't know. Or, there were oil rallied and EMEA stocks, some went up, some went down, like I described earlier, and maybe your strategy is very sensitive to these things. But a lot of times, I think the expectation is that a quant researcher is not, staring at the news.
No.
And they're instead staring at a Jupyter notebook, and they're coding up, the strategy that they want to release next month, and they're always looking forward rather than kind of looking backward.
All right, well, let's set the stage for Ehsan coming up here. What you just said, I'm gonna go touch on some factors that I pulled up on a month to date and year to date to kind of frame what you just said was movements into vol, out of low vol on a modest standpoint. And then, Ehsan, we're gonna look at the entire screen, and let me go here. There we go. Is this you guys seeing it, or did I miss you?
We do not see it. If you're on Chrome,
Still there, still not there, right?
Nah, something flashed, but I don't see
And
it.
you know what that means, Bill.
It means you logged in with Microsoft Edge or your
With my Brave browser that a true Bitcoiner does, but when it gets on
yeah.
Riverside, it doesn't work very well. So I am gonna I'm just gonna talk through it. Here, we're not gonna lose anything because Bill, nothing's changed. Get what in the world of global assets? Guess what the two commodities leading all other assets month to date and year to date and over the past year.
Would those be gold and Bitcoin by any chance?
Gold and Bitcoin, you were tuning in for the past 3 months. Yes. Gold and Bitcoin. I think gold might be like just a few pennies away from 3,700, 3,680 last time I checked. Today, Tesla's up. Why? Because the board said, we love Elon. He's the only guy, and he goes out and buys, what, $1 trillion worth of shares, Ehsan, today?
Something like that.
I think, it was $1 billion, but, money's funny these days. So the reason I don't need the slides right now is because August was a rotation. It's like, hey, what's going on? Jobs are bad. Maybe, inflation's there. Value was up. And August was a big rotation into low vol value, momentum and growth were gone. September is back to business. As Bill kicked off, volatility stocks are bid. Tesla, which was down 30% a couple months ago, is up on the year for the first time in a long time, year to date. And tech and gold and Bitcoin are going. Why? Because jobs are tough, man. We rewrote over 300,000 jobs in May and June, or almost 300,000. They fired the head of the BLS, and then it didn't get any better, and we disappointed. And the government actually was a net declining in jobs. So you have the government who directly and indirectly accounted for about 70% of job growth over the last 12 months through Medicare and Medicaid payments indirectly or through employment directly. That's changing. The private sector is in this weird, they say, steady state. They're not hiring and they're not firing because things are happening so fast with AI. They're eating the margin decline until they figure out whether they need, whatever employment roles they have. So, Ehsan, I talked to Bill while I was coming over here, and I said, can we discuss what you're doing with the conference on the 30th? The folks that you're working with at Columbia, because I'm also working with some students at City University in New York, and we're talking about jobs and how to place them. But basically, what does the job market demand these days? Which I think we're pretty well positioned to speak to that. And what skills do these young people need coming in? Because again, you don't need the slides. Rates are going down. And they're meeting in this middle place between the UK, which is up at 5%, and Japan, which is around 3%. In the middle end, and we're all going to end there until we figure out what's going on. So we're collapsing to this middle ground because Japan's worried about inflation, we're worried about jobs. So there's going to be volatility. We will have a 5% move in markets, probably in the next 3 to 6 months because we're pressing valuations. Bankruptcies are coming up on small companies, and the Fed is still tightening on a quantitative basis. And the price of money doesn't matter. It's the supply of money. We need to have more money in because velocity of money is lower, there's hoarding going on, and we're still having failures. So the government needs to add more money. Globally it's happening, but not in the US. So and before I hand it back to Bill, who's going to queue you up again, what I want to sort of have in this discussion in talking to people, because our audience is barbelled. It's kids who are looking to either get into the workplace or realize they don't have the skills.
Yeah.
And it's the older folks who have a business and they're worried about it going away. So that's our market. And productivity, one of our guests, Ehsan, earlier in the year said the price of intelligence is going to zero.
Well, I don't know if it's going to zero, but it's going down.
But the price of stuff we need, whether it be rent or some services, they're going up still.
Yeah.
So we're in this drawn and quartered weird environment where companies are forced to reduce their roles because of margin pressures. So employment is going to be going down, unemployment up. And then you have prices going higher. So what should we just sort of put our head in an oven right now and just end it all? Like, what is there a good story right now, Ehsan? You can tell people why should they go to your conference? How can they retool? What's the good news out there? I'm going to throw that at you.
Well, I think there is no sugarcoating it on the resourcing side, whether we like it or not. The days of young analysts being 100 on finance and accounting and 0 or maybe 10 on technology, those days are over. You need to know those stuff. You need to have sort of a fat T-shaped profile in terms of a skill set, in the sense that you need to have deep expertise in finance and accounting, but you also need to know good amount about other stuff, including technology, and AI is not an exception. You need to know this stuff. Because I can give you an example. Think about a fund with 3 analysts and a PM. And let's say these are junior analysts. On the salary side, maybe they get 150 plus bonus. And one of these analysts' job is reading stuff and summarizing the stuff that he or she has read in bullet points and things of that nature. But guess what? It's only a matter of time. Change is happening slowly in fundamental and value investing space, but it's only a matter of time before that PM figures out that, okay, there are tools and data sets out there which are good enough. And then, decides to adopt these technologies and let that analyst pursue other opportunities. Then he or she won't be paying any bonus, and overall cost will be less than 150,000, and then he or she will pay no bonus. So that's definitely out there, but there is also the second half of the glass which is full, and I think on the plus side, it provides single manager funds, value investing shops, the small funds with tremendous new capabilities, and we talk about some of those in the conference, in the sense that AI can significantly improve the capacity of the small funds to process and analyze a larger universe of names, stocks, securities, and so on and so forth. And when you're able to analyze a larger universe, then you're more likely to land on more promising opportunities. And if you can capitalize on that, that translates into alpha, you know. So on that side, I think AI can definitely be helpful. So that's the plus side. That's my
Got it.
on it.
And I think as you've learned, Mark, Gen AI is probably one of the big focuses where new entrants into the job market can actually make a difference, because they are so productive, in helping you do your own research or to answer questions. And the focus of the upcoming conference is Gen AI rather than just broadly artificial intelligence. It's generative AI, which means LLMs. It's ChatGPT, Grok, Gemini, etc. Claude.
How does that differ than AI, Bill? Can you touch on that? I'm not just doing that for other people. I also want to reiterate what that difference is.
Sure, and there, I did want to make a few potentially snarky comments before I do that, and before I respond to that. One is, I don't think that they're kids; they're young adults who are entering the job market, and we don't think anyone should ever, quote unquote, put their head in the oven and end it. That I don't know if that was
Bill, I think you've been working for bigger companies. No one from compliance is going to get you. Come on.
I don't know if that's like a Hansel and Gretel reference. I was like,
It was about the consuming mother. Yes, it was.
okay. So yeah, there's your visual. And so to answer your question about Gen AI versus AI, artificial intelligence is like a superset of all things um, that are kind of computers beyond the ones we grew up with. And it started off as machine learning, which at a very high level just meant that you could take a quantitative statistical model and then look at the output, see how well it did, and then use that as an input. So there was a feedback loop.
Okay.
And so machine learning at a very high level allowed you to do what we also call data mining. So basically you could say, how good was my prediction? Oh, it was a little off. Let me try again. And you just keep iterating until you get like a perfect forecast. And I was very discouraged by my early tutors, my early mentors in quantitative research were, linear regression, classic econometrics, machine learning was a bad word. People like Cliff Asness didn't embrace that, but that was really just still doing statistical modeling. So you can think about a linear regression where you have two time series of data, one predicts the other. And when you find a good predictor for an outcome, so, data, stock price, you can have, fundamentals being like value predicting stock prices, and that's a pretty good relationship. Um, Ultimately, machine learning was the same thing. You're using time series data to predict, and all you would do is change, the outputs of this model. So the coefficients and the parameters, and I don't want to get into too much fancy jargon, but machine learning ultimately is a pretty basic application of artificial intelligence. And I actually used to actually make my own distinction. There was machine learning, and then artificial intelligence was like more complicated stuff. So that's when you get into neural networks and like these true black boxes where you have you try and approximate the human brain with a neural network, and synapses between these different networks, and that's where you get into nodes, and they actually use the same nomenclature as like what's the field in medicine that studies the brain?
Neurology.
Neuroscience.
Yeah, like exactly. It's like they use a lot of the nomenclature from neuroscience. Thank you. And then it expanded even more. So natural language processing was one area in sort of predictive modeling where I started to get more and more familiarity with the black box models and what I used to broadly refer to as AI. And so natural language processing then evolved into the generative AI space. And that is, I guess the easiest way I would explain some of this is you take a bunch of text, and you could take like the entire internet, for example, and every book that was ever written, and feed it into a machine and say, and convert all of these words into like numbers. And the way you do that is you reduce text into bite-sized pieces, and then you sort of derive relationships among them, and a lot of times those are you would refer to those as vectors. So when you ask a question, how do you, and then complete the sentence, the computer starts to get very good at guessing the rest of your sentence, because based on the context of who's asking, where they're located, their search history, so the biggest algorithm of all would be Google, which learned what everyone completed typing when they started saying, how do you, and if it was cook, it could start guessing, okay, how do you cook their favorite food and the ingredients and all this other stuff. And then that
I know, Bill, like 15 years ago, my wife went to Stanford, and so we'd go out, visit friends, her friends, and they would talk about seeing the Google trucks back up to the Stanford library and put all the books into, they basically had a big card. They went in and said, we're taking out some books today. They literally would go in and take the books out,
Yeah.
read them, and put them back. They've been doing this well. I love the fact you just said that they did it because they did the work earlier than others.
And then that is actually called training. So the big thing that generative AI brought, so chat, let's just say ChatGPT and the other ones I already mentioned all do the same thing. They have training data sets that are not like terabytes of data, that they're like, it takes years to actually train this model to parse through all this information, process it, come up with vectors and what we also call tokens, which are bite-sized pieces of text, and start figuring out how it all fits together. And so now when you ask ChatGPT about a very complex topic, it can provide a very thorough and generally correct answer. Of course, when it hallucinates, that's when you get a bad answer. But training and retraining and continuing to just load more and more data, questions and answers to the machine allows it to become very, very, very good at guessing what the answer is. And so when you get into generative AI, the machine actually generates its own answer. It's not just going to give you an answer that is consistent with what it saw many, many times. It's actually going to start guessing its own answer. And it's become extremely sophisticated over the past few years. And you see some of these statistical measures of how accurate it's become. How long did it take for the AI to beat humans, and you name the test or the
Bar exam,
specialty.
things like that.
The bar exam, yeah, great example. And so, yeah, generative AI is a kind of specific area where you have this prompt, you ask a question, and that's your prompt to the machine. It comes back with an answer, and then it can actually morph into more and more, like we're seeing with agents and actually generating code. So you can say, okay, you answered my question. Now, help me demonstrate a way to build this into a process, and it can sort of lay out a process, and then you can say, okay, automate as much of this as possible, and it can like automate different pieces, and then you can say write the code to actually automate this. And then eventually you have this like army of agents that can actually start coding and recoding and then reading and getting the responses. And it's incredibly complex, and I think it's something you have to be very careful about building, because computers are always good at doing like one thing well, and agents are kind of the same way. But I don't know, I just talked for like 10 minutes about Gen AI, and that is in fact what Ehsan is here to talk about, so I
Yeah.
should probably let him speak.
No, you were spot on, and thanks for the clarification. In fact, our conference is called, as you know, GAIM 2025, which stands for Generative AI for Investment Management. Is happening on September 30th at Columbia. But while you were speaking, you might find this funny. I was thinking, okay, of course, Bill and Mark are both towering figures in the field, but it seems like they're physically also taller than me. Because if you look at yourself and me, I was like, is it because of my seat? And I changed my position. I was like, no, 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 I'm still the shorter one. So I found it funny. I thought I'd share it with you.
That's it. Being built low to ground in a very volatile market. It's okay, Ehsan. That's a good place to be.
Right.
Solid.
And I
I
noticed,
thought
I
that
don't
your
know if
picture
this,
that I thought that your picture that we had promoting this made you look like Max Planck. Like you look like a very distinguished, like 1930s engineer. I don't know if you, we can't flash it for the audience, but you should go up on YouTube, and I think, yeah, I go with that one. I love that one. So as far as pictures, I
Yeah,
think you blew the
I
marks in
actually
that.
I've actually had that type of reaction. Someone told me, I think a decade ago, and I was wearing different type of glasses back then. He told me, you look like a Soviet scientist from Czechoslovakia.
Yeah, I went Germany, but yeah, That's so great. Bill, I think when I want to touch on one thing here that goes into our first sponsor of our podcast. We have a Bitcoin custodian called Unchained, who's our sponsor. I use them. Um, they hold my Bitcoin, and what I want to, as I go into this, Ehsan, I'm not going to do an ad read. I'm just going to share about how I use it, why. But I'm in Denver now visiting my sons, and there's this place called the Space. It's a Bitcoin workspace because Bitcoin and a lot of businesses are remote, and so they get everyone together. And I was talking to this guy who runs it, and what Wyatt was saying is we were talking about AI and Bitcoin and how AI were like, it's going on, but like, how can you make it work for you? Like Ehsan, you just said that the PM may realize that the $150,000 a year guy could be replaced with getting the bullet points from something else. And that's true, but maybe another fund can do it even better. Like AI is changing things so quickly. I don't know if I'm going to be on the right side of the AI, business because it's disrupting a lot. We know what you can do. Go to your conference. That's a good first step, and keep going. Listen to our podcast. You'll be helping the odds. And guys like Microsoft are getting ahead of it, like they're going to the nuclear power plant and they're getting energy. So here's a thought. I think AI and Bitcoin go together, and this is why Bill and I did this whole podcast, is AI is a stepwise change in the formation and delivery and ingestion of information intelligence, and more than that. And it requires energy, and a lot of it. And an incessant, persistent amount of energy. Bitcoin is also a disruptor, I believe, and it requires energy, but not persistent. They are price sensitive. So a lot of these power plants are now putting the two together because Bitcoin will walk away when price spikes. It'll come on when price drops. It's very complementary. And the thing about Bitcoin, which I like, is all of that technology is forced into and channeled into the network for the benefit of the Bitcoin holders and making it more secure, making it more decentralized potentially as you go to more trapped energy all over the world. So that's one thing I want to talk about is as you look for jobs, balancing AI and Bitcoin. But really what I want to do is figure out a cool way to talk about the ad read. So this company Unchained, what if anyone's interested in Bitcoin, there are a lot of ways to buy it. Exchanges, ETFs, you can do the treasury companies, but you really got to hold it. You got to hold the Bitcoin. The ETF wraps it. Wall Street loves wrappers. In the old days when bonds were around with warrants, they took the warrants away, gave you the bond. Like anything they sell you, it's going to be less than. It's always going to be devoid of nutrition by the time you get it. So Unchained lets you hold it in a 2 of 3 custodian. You hold 2 keys, they hold 1 key. They have higher touch ways of doing things if you have a lot of Bitcoin. And so we just suggest you contact them at unchained.com. Again, I use it. The thing that's authentic here is I use it. You got to own Bitcoin, not the ETF, because you can move it. I think the lending market or borrowing against it, not lending, borrowing against it's going to be a big deal. So that's our first ad read, Bill. I'll give it a B. We'll get better at it. But the message is give them a call.
Yeah, and I would say the B plus will come when we actually talk about the nice application of borrowing money from your Bitcoin to pay off other debts, and there is a like a real advantage to holding Bitcoin that I don't think enough people appreciate. But yeah, let's get into some of our like prepared questions and kind of the more formal interview,
All
Ehsan.
right.
So
Sure.
I guess the easiest thing to start with is like what brings you to the New Barbarians podcast today? It seems like you in the intro I gave a few clues into where you are now, but how did you end up as a uh, blogger and adjunct professor who's organizing conferences at Columbia University?
Yeah, I mean, my background, I spent more than 15 years in a management consulting world before transitioning to investment management. And, one thing that you get exposed to a lot as a consultant is problem solving. You have to deal with a lot of different types of people, and you kind of need to understand and help companies transition from good to great, or from a status quo, which is not necessarily ideal, to a status where you want to be. And I think this type of a skill set, this type of um, uh, sort of things that you get exposed to, come really handy when you become a value investor or you become a fundamental investor. Because as many luminaries of this space have said, including Warren Buffett, your big part of your job is not necessarily being a mere stock picker, but be a good business picker. And in order to pick a good business, which can compound and uh, uh, generate alpha for you in a sustainable in long term, you need to really understand what makes a business tick, what makes a good company, what are the odds of a transition or a turnaround to be a success when a company is going through one, things of that nature. So that was something that was really helpful for me, coming from a consulting background. And the reason I moved and transitioned to investment management was a number of things. One of them was during the course of my career, I got exposed to a few investors, including an activist investor who really made an impact in a company that I was working with. And I was like, okay, I want to, um, um, you know, be in his shoe, doing stuff like that. And one thing led to another, and over time, the interest became an obsession, and obsession became morphed into a career. So that's how I ended up as investor. And when it comes to teaching at Columbia and writing a book, I think, thanks God, there is some reinforcing component between these elements that I talked about, in the sense that I teach generally about the stuff that I work on in a day-to-day basis. So in that regard, I think it's a very humbling experience, because you get challenged constantly by smart young individuals in the classroom, but that gives you clarity of thought and helps you actually learn yourself in the process. And then the writing part, you talked about the newsletter. I write the Value Hedgehog on LinkedIn for 6 days a week. I wrote Finding Value in Numbers, which was a 3-year project, and recently I finished another one, which is called How Not to Be Replaced by a Spreadsheet That Talks, which is about generative AI for fundamental investors. These have been the result of some of those interaction, learnings, readings. You kind of feel you want to share them with the broader community, and connect with like-minded people. So that was one main motivation for me to sort of put pen on paper and write this stuff, especially on the newsletter. And the books are coming out shortly, less than a month from now and 3 months from now, respectively. But especially on the newsletter, it has been really highly rewarding. I come to know new people, become friends with them. Uh, you know, um, that such interactions and friendships would not have been possible if I had not started writing Value Hedgehog.
So that
Thank you.
connected you with friends by your writing, not just formed your thoughts better, but it connected you with people that maybe you met 3 years ago, haven't seen in a while, or keeps you up with other people?
Exactly. Because sometimes even old friends reaching out to me and say, "Hey, by the way, I've been reading your stuff. I saw this interesting article. You might be interested to write about that, or I came up with this stock pitch. Would you like to write? Would you be interested to write about that in your newsletter?" So it's been paying dividend in many ways. But yeah, most of it goes back to getting to know interesting people or keeping in touch with old and new friends. Yeah.
And yeah, since we're first of all, 6 times a week is not only prolific, that's incredibly impressive, and I have a feeling you're not just using an LLM to generate everything. So that's uh, that's a huge feat. So great work there, and I think some of my feedback has really just been on your comments about Prince and his guitar riffs.
Yeah.
Um, I believe it was the "While My Guitar Gently Weeps"
Yeah.
live version from the Rock and
Tom
Roll Hall of
Petty.
Fame.
Yeah. With Prince.
Yeah.
I think
So
2004 Rock and Roll Hall of Fame, if I remember correctly.
yeah, so I went and listened to that and watched it. That was pretty cool. So thank you for reminding me about some of the non-financial things that are cool in the world. And I did want to also just
Sure.
make sure we circle back for a moment. You're at Crescendo Partners, and you are a fundamental researcher analyst at a fundamental investment partnership, correct?
Yeah, we do value oriented investment, and um, occasionally we go activists on North American equity targets. We also have a SPAC business. We bring private companies to public markets, applying that same value-oriented lens to picking targets. Right now, we're looking for our ninth for targets for our ninth SPAC. So that's also a part of our business.
So what's kind of cool about having you on is also the fact that you're a new type of guest for our audience, because it's all quant research, it's all tech,
Right.
crypto, but I don't think we've actually had a more traditional value investor on here. So that's cool. But what's really cool is the crossover. Then you, as a value fundamental investor, are embracing generative AI, which
Yeah.
in my world was, I didn't think anyone would ever really know what I'm talking about when I start talking about things like AI and the the distinction between machine learning and natural language processing, all
Yeah.
this kind of stuff. And now it's like, on Super Bowl commercials and stuff. So
Yeah.
it's pretty cool that you're embracing what I'll call some of the more traditional quantitative research tools, such as generative AI, which, who am I kidding? Everyone uses
Yeah.
ChatGPT now. So um,
Yeah. Everyone
cool.
uses them, but I think um, whether we like it or not, we gotta embrace it because the nature of the game is changing. I mean, we in the finance world have this tendency to make these big proclamations. Like in the 90s, we were saying, .com is going to take over, and then it was social media, and then machine learning, etc., etc. It was mobile commerce in maybe late 2000s. This is different. This is going to, I think, fundamentally change the nature of how business is being done in many industries, including investment management. So whether we like it or not, we need to start, familiarizing ourselves and adopt these technologies.
Um, and I guess, can you just describe high level how you're using generative AI in the value investing process? And just to bring up one of your heroes, like, I know that Warren Buffett always prides himself on like reading the 10K cover to cover, and sort of um, understanding a business by actually like carefully going through its SEC filings. So I'd be curious, anticipating that maybe it's helping you with text, how you sort of differentiate between that
Yeah,
ideal and
I think you can use it in a lot of different capacities. Let's say from tactical use cases. If let's say you're an activist investor, you want to generate different forms or formats or tones of activist letters, compare them with each other, see how one contrasts versus the others, stuff like that. To more high level tasks to look at the portfolio, see if the thesis tracking for the positions that you're holding. You could do all sorts of things like that. But specifically for value investors, I think can be useful in the beginning of the investment process, beginning of the funnel, where you're generating ideas. So generally, you in value investing shops, you have few people who basically generate the idea, go through transcripts, press release, commentary, sell side research, and stuff like that, to get themselves familiar with the name and see whether there is something there. Okay, this process generally takes from a week or 2 weeks to sometimes even 6 months. So I think in terms of idea generation and doing preliminary research, GenAI can help value investors process a larger universe, as I mentioned earlier, and focus that process of reading cover to cover on the more promising one, rather than do that on every single name. So I think that's one high impact use case that value investors can definitely adopt, and we've been using it at Crescendo as well.
Not to take the wind out of the aspiring AI or the analysts trying to make 150 grand, but that speaks right to that role, that curating that initial cut is where you see it happening. But and Bill, to your point about the fundamental guys, isn't quantimental research kind of, everyone does a little bit of quantimental. They have to do sorts to figure out what to work on. So that model's not new. It's just that this tool is absolutely the quickest, the way to accelerate that and enhance it both, I think.
I think it provides tremendous scale for what I'll call screening and filtering for stocks. And in my world, a lot of quantitative factors are just that. They're screens that give you companies that have certain attributes. So value stocks, you run a algorithm that shows you book to market ratios for a bunch of companies, and then you rank them, and then that's how you do your filtering. But now what I think Ehsan is saying is you can ask the LLM to expand your universe, and you can say, I know a lot about this stock, tell me about the rest of, a list of stocks that are similar, and then provide some attributes about them, and then filter that down. And I'd love to get a little bit more into how far down the rabbit hole you end up going, Ehsan, with agents. And I know from the list of speakers and sponsors at the conference, a lot of companies are actually catering to fundamental investors. They'll say, we'll give you the ability to really take your screening and investment process to the next level with natural language prompts, and you could actually just take what I just said and perhaps extend your coverage from 10 to 100 stocks. You won't dive in as deep as you used to for all 100, but you'll actually be able to find 10 within the 100 that you really want to read and learn everything about. And so that scalability is actually a concept that I think hopefully everyone's catching on to, because I think that will be the differentiator with, call them the new job entrants, who can get answers about a lot of things quickly by finding the right questions to ask the machine and to improve on those questions, throughout their career. And ultimately, like, a lot of your questions as a junior analyst come from your boss, right? Like they ask
Yeah.
you a bunch of questions, and you go back and you're like, well, what did they want? And it's, I think, a very similar process where you can like train the machine to think like your boss, who has a lot of experience and has been burned before, and so they know what they want in a company and what they don't want, and you can start to train your prompts and these questions you're asking the machine to, you know, preempt some of those questions that you always ask, and you'll just get better and better at analyzing companies if you use these tools.
Yeah, I
Um,
think in general, traditionally, value investors and fundamental investors, many of them have been generating ideas in one or more of the following three ways. One is top down, which is, as you mentioned, is generally screens. I'm going to look at, low price to book, or cash flow yield or things of that nature. Second is more ad hoc. They go to idea dinners, they talk to their fellow value investors, they read a lot of newsletters, they read newspaper articles, reports, things of that nature, and come up with ideas like that. And then the third one is investing based on themes. They come up with trends, they divide them into sub trends or sub themes, and then monitor a few companies within those sub themes and see which one is a more promising one. So right now, what GenAI has enabled investors to do is enhance the quality and performance of each of these three. Now, you can use screens based on quantitative factors, but GenAI allows you to also screen based on qualitative factor. For example, I'm looking for a company which is going through a turnaround with a able management who has had track record of successful turnarounds at least two times before. That was something that was not possible, a couple of years ago in your Cap IQ or Bloomberg screen. Now you can do that with Gen AI. Or when you go to ad hoc idea generation, you could only read maybe 3, 4 newsletters, maybe a day or per week. Now you can do 40, asking Gen AI to summarize the key themes and compare that with the proven themes that you have sort of been investing based on in the past, things of that nature. As you can see, it tremendously and significantly increases the capacity of you to process opportunities, and that uh, translates, if you have a structured process, into alpha at the end of the day.
cool. And I did touch a little bit on the different sponsors and participants in the conference itself. Um, which I guess I should just pull up the agenda, but like, which session of the conference do you expect to be the most interesting to, our audience will be fundamental investors. They
Yeah,
won't be necessarily quants. In fact, the quant conference is this week on Friday.
yeah.
Um, and then, the rebellion research one that you may or may not go to because you are, again, a like a fundamental value investor. But
And let's
which
face it, the post drinks is going to be much more fun at Ehsan. I mean, I like, right? I mean, let's just call it out. But go ahead.
that, that that's yeah, I'm offended by these assumptions about this social abilities, or yes, I'm offended. But yeah, like, what do you think will be the most popular like session or concept that these people are interested in hearing about?
I don't know. I'm personally looking forward to hearing the insights from all the speakers and panelists. Well, we have a couple of exciting one in the morning and then few in the afternoon. In the morning, we have a fireside chat with Pete Peterson of Causeway. As you know, they manage more than 50 billion in assets across fundamental and value strategies, among others. So Pete has actually been one of the pioneers of adopting Gen AI in investment. So he's going to talk a little bit about the evolution of Gen AI usage in his firm, how the impact has been on the organization and on analysts' day-to-day life, and how basically to stand up such capabilities. So that's one which is interesting in my view. Another one which I've been moderating is a fireside chat with a few executives from AlphaSense. They're going to talk about what they've been hearing from customers in the market, not about AlphaSense, but in general about Gen AI solutions, where the demand is going, what type of features are in high demand, things of that nature, and where they see market evolving. So that's another one to watch. And then we have panels with companies like Pine Gap, Quantly, Hudson Labs, Portrait Analytics, and so on. These are promising startups working on different parts of the investment process. So those discussion would be on, specific use cases that they have found interesting in respect to doing investment research. In, they've been talking about how to scale Gen AI capabilities, moving from ChatGPT to more sophisticated aging workflows and more sophisticated finance-specific tools, how to deal with issues like privacy and security, things of that nature. If the company or fund is already using these technologies, how to mature them, make them more advanced. So that's basically the gist of some of the panels that we'll have in GAIM 2025.
The when Bill told me about this, they said let's get a ticket. The suggestion, the advertisement, which is not a sponsor, but it's more of the reason we got together, hang out with smart people. When I wanted to do a podcast, I went to Bill. I said I'm doing one on Bitcoin. He said, well, hold on, AI is popping. I want to do one on AI. Let's do it together. And
Right.
I had that was not my plan. And what I think is happening now, when you got a technology platform like Discord, that is now the platform that countries like Nepal have used to vote in a new government over the weekend, like they did or last week. Well, when you have the Bureau of Labor Statistics being fired midstream because they don't know what the employment situation is like, when the U.S. government is getting stakes in public companies for the first time ever, like in Europe, which is dying on the vine in a growth standpoint and grabbing value wherever it can. When you see all these signs of change, maybe pick your head up, get away from the computer, and jump into the city, to a place where there are people that are different than you. They're in a space that's moving. And I guess the point about having you on, which I love when Bill did it, is that you're in the fundamental space. Your thing about technology and bulldozers that you had on your newsletter, like you're bilingual. You're able to speak to both, and you realize this is going to help your firm, not just survive but thrive in the next stage. And anyone looking for a job or trying to get better in their job, it makes all the sense in the world to pop down on the 30th, I think.
Thank you. Um, uh, yeah, I think it definitely be helpful, both in terms of opportunities for networking with fellow investors, exchange ideas, see what has worked, what hasn't worked, and how the right way is to go about it. But also, I think one of the benefits of this conference is that we're bringing close to 20 Gen AI solution providers on board. So they will set up, tables with computers and things of that nature. So you can attend and in just one day go and visit all these vendors. And essentially, if you have any question, you can ask your question. You can see and have a mini demo. And in one day, you basically see what's out there in terms of the finance specific Gen AI solutions. So I think that's another value add beside the networking and opportunities for finding jobs.
So yeah, networking is great, but it sounds like an attendee to this may actually figure out what the heck to do about AI and Gen AI and
Yeah.
figure out what their the new analysts and the senior analysts should be
Yeah.
using these tools for. Um, and I think it is a daunting thing. And again, I came from a world of like natural language processing, and I remember when ChatGPT came out, we were like, oh wow, this thing is gonna just do a much better job than those things we built over the years. So we did have a head start, I think, in applying these tools. But I think a value investor who may not be, you know, coding in Python all day, for example, may really benefit from understanding the actual use cases for other um, investors.
Yeah, I think I mean I'm gonna keep it PG-13 here, but this is a topic. It's a little bit like a topic of romance for teenagers. Everybody talks about it. Nobody knows how to precisely do it, and their idea of it might not necessarily be as as it should be. So I think this is an opportunity, to enhance their understanding on these technologies, and I think that's just a necessity, because in the long term, my personal view is that Gen AI is not going to replace judgment. So I think in maybe 5, 10 years from now, we're going to have a bifurcation of performance in fundamental and value investing shops. The ones who use it extensively and they have the right judgment, and for those folks, it allows them to process huge amount of data compared to maybe 5 or 10 years prior, and get ahead. And it's a double-edged sword. The ones who don't have the right judgment, it actually exacerbates the situation, because they will have failures on a steroid. So in that regards, I think um, uh, it will have tremendous impact on the marketplace, and how the players will perform a few years from now. But whether we like it or not, or we need to learn about it. So this is a good starting point.
So garbage in, garbage out still stands.
Exactly.
Or the
Exactly.
physicist, initial conditions, same thing.
Yeah, no doubt, garbage in, garbage out is a big problem that's only going to get worse. You do see some of these um, people with expectations like, oh, the computers can just replace the humans that have all this experience, and it's true that they can replace certain processes that are kind of rote and repeatable and
Yeah.
easier, but they're not going to replace the judgment of people who evaluate, a management for a company that they want to really invest in for a long time. And
Yeah.
again, you'll be able to encode more and more of the human judgment process, but yeah, human in the loop will prevent, true garbage in, garbage out. Like
A
if
trained
you
one,
just
right?
you know
Like, back, and I didn't realize I was going to focus this much on the conference, but I'm out here in Denver. Again, I met with these guys, different folks. I'm coming out again, Bill, to speak at one of these conferences, and meeting people is all the difference in the world. They even look different than when you see them, and there's just more information. So, an agent cannot go to your conference, at least without the help of a person. So if everyone's, back to Bill's point, we're not, the hyperbolic, oven comment was basically about people being down in the mouth about the job market, and you can be, but get your stuff together, get out, put yourself at risk, and talk to someone for God's sake, and they may have something to tell you that you didn't know, and that's something that you can do as a person, and I'm a little animated because I think that this mentorship on these other, coming out of college, it's not there. And hopefully these guys and gals are listening to this podcast and go to your conference. That's a way that you can take ownership of your career and get front-footed and use the tools opposed to getting tooled. That's how I'll end that one.
So perhaps this is covered in one of your books, but one question we had was discuss the build versus buy versus hybrid decision for fundamental shops to use Gen AI. What are your thoughts on that
Yeah, I
specifically?
haven't written about this before, either in the newsletter or the books, but I personally think I'm personally a huge fan of buy versus build. I think ideally you buy and do some customization, or do buy and do a little bit of a build, but not extensive build, because I think this type of technologies are evolving really rapidly, and especially for small shops, we are investors at the end of the day. We don't have time or expertise to go and start building this stuff from scratch ourselves. And the technology is getting better. You can mix and match different modules, different solutions, connect them with each other, bring new data sets, and do things of that nature after, out of the box, or with some slight customization, and get good results. So I don't think, at least not until you're a very, very large, multi-billion dollar fund, I don't think building this stuff from scratch makes sense. But that's my personal view. You might disagree.
I think we've found that we agree on a lot of things, and on this, we're definitely in agreement. I and coming from quantitative investment, quantitative investing and quantitative research, the build versus buy question comes up all the time. And early on you had to build everything because there weren't providers, there weren't technology solutions for a lot of the things that early quants were trying to do, so they had to build everything, and that can become very burdensome later on. And anytime you can buy something that a specialized technology company is going to deliver, is there is no question about the value proposition. They will always win because that's what they're focused on. We're focused on investing even in quantitative research, even in specific parts of the process. I'm always a proponent of buying over building if possible. And maintaining, you don't have to maintain and upgrade technology. Like, imagine if you built all of your workflows around any given generative AI tool. So don't build everything around ChatGPT because Claude is going to be better at certain other things. And it would be a big mistake, I think, to build everything around any given one. The world is changing so fast that not only do you need humans in the loop, I think you need multiple operators and multiple tools, and to always keep your eye out for the next thing.
Yeah, I mean,
Go ahead, Ehsan. Sorry about that.
no worries. And look at the amount of capex that these companies have. If you want to have something respectable, even not only eat all your management fees, but then some. So it's just a no-brainer, in my view, especially for a smaller fund, to just buy the solutions and customize them.
Yeah, and just to give the flavor about how I approach it, all the if I belong to a gym down in our house in New Jersey, and I bought an annual membership because I'm going to go, and the machines aren't going to change that much. And I'd rather get the 15% discount annual versus monthly. When it comes to my models, I'm monthly on all of them because the whole environment's so variable. And they're trying to get you to buy annual, and I'm not going to do it for, because I don't know what. So that, I think, to buy it versus build it, as you said, they're spending billions, you can't, and you can rent it monthly while you figure it out. And it's just a much better dynamic. And then invest, as you said, I quote Bill's thing all the time. One of his mantras is higher, better purpose. That's not what you do. That's not what I do for a living.
Exactly. Exactly.
So we are at about an hour and 5 minutes, I think, running out of time a little bit, but we always want to just reiterate what's upcoming and what you are doing and where to find you. It's pretty easy to find you on LinkedIn, the Value Hedgehog. You want to just provide a few more plugs around these upcoming events? And I don't believe you're on Twitter or X, but yeah, if you have any other like social media sites.
Yeah, I think LinkedIn is the best way to reach out to me in case you want to discuss something. I write Value Hedgehog newsletter 6 days a week. So if you have ideas for topics you'd like me to write about, if you have a stock pitch, feel free to get in touch. We talked about the conference, which is upcoming at gaimconference.com, GAIIM conference.com. And then I have these two books coming out. One is called Finding Value in Numbers. Is coming out on January 13 from Columbia Business School Publishing. Mario Gabelli was kind enough to write the foreword for it. I was really honored, and it has received good feedback. I have received good feedback from people who've read it. So check it out. It's on Amazon, and I was delighted to see that it was number one hot new release on Amazon. Even though it's not out yet, but you can pre-order it. And then I have another book coming out, which will be given out for free in the conference. It's a really funny 180-page book called "How Not to Be Replaced by a Spreadsheet That Talks: The Generative AI for the Fundamental Investor." So if you're at the conference, obviously you're getting it for free, but we will also make it available on Amazon towards end of this month. So this is what's coming from my side, and thanks again for the opportunity to talk about them.
And I realize that people should, get the book and read it, but is there a punchline that you're comfortable sharing about how to do that?
Which one? The GenAI one or the other one?
Your spreadsheet that talks.
Well, if you like, I can share the first few chapters with anyone who is interested. So I just get in touch with me on LinkedIn. I send you the first 5, 6 chapters um, um, for you to check out.
Okay, but people will find out how not to get replaced. Hopefully.
Well, the book is about giving you a mindset. I think at the end of the day, if we don't do anything, all of us will get replaced. But if we adopt the right mindset, adopt these technologies, embrace them, use them, we will have at least some protection. That's the punchline, I guess. Along the way, the book also talks about some tips and tricks, on how to adopt these technologies. So that's basically the high-level summary of it.
Awesome.
Great.
With some humor.
Exactly.
And
I mean, if you like cartoons, each chapter has a cartoon. We bought the rights of those cartoons from New York illustrators and some other artists. So I think you will learn a little bit, but you will certainly laugh a lot
Good place to be.
when you read it. Yeah.
Well, I will see you and everyone else at the conference on September 30th. And Mark, anything else to add?
Nope, that's it. Yeah, Ehsan, thank you very much. I am. So that's going to be at Columbia University. Is that correct? New York City?
Yeah, at Alfred Lerner Hall, and we can connect offline. You're invited. If you
Good. Well,
have
that's
time,
nice.
we will
We're also
fly you
going to
to
have it in
Alfred.
our show notes, Ehsan, so that we're going to have it when people listen to podcasts. They're not going to write it down, and we'll also have the Unchained.com information about how to contact those folks when you want to buy Bitcoin, own it the right way, so that you can play the long game and be your own self-sovereign there. So get smart, go to Ehsan's conference and stay wealthy, buy Bitcoin. Nice day. Glass is half full with the new barbarians here, folks.
Yeah, exactly.
Thanks all.
Have a great day. Thank you.
Take care.
All right, we're good.